Good morning, traders. This is Ala Peters on November 7th at 10:26 EST. Oil news in 4 minutes. But first, let's take a look on this chart, what to expect on oil today. And then I would love to walk down memory lane, going back many years on what was discussed in the trading room and what was presented on various social media forums utilizing method on oil, so you can see the power and accuracy of the method going back years. This is oil weekly chart. When I work with institutions or I utilize the chart for my own investment decisions, this is by far my favorite chart. Here's a bullish trend inception 2016. This no longer is bullish trend inception. This is Fibonacci reversal zone. Buy as low as possible, sell as high as possible. Price reminding you, reversal zone not the place to buy. Reversal zone the place you monitoring for short and exiting your position. As price collapsing 80+% of the time, all the time. No surprise what oil had done. But first let's walk down memory lane all the way to 2015. Here's a chart on oil. This is where oil sold off from, chart present in the trading room since 2011, when oil was at reversal zone at 126. Oil collapsed until reversal zone, very bottom. Trend inception on monthly. If you are utilizing monthly chart, you're holding position for years. Weekly chart is a lot more reasonable. So you see that this is trend inception on monthly, and you are paying attention to this next. Shock or not, buyers step in. Oil skyrockets from trend inception and reaches key Fibonacci resistance. Shock or not the place to buy. The end of the minor trend, oil in war zone. Oil collapses from this level back down to trend inception. And this is what oil does next. This is oil at the start of 2018, sitting at key Fibonacci target in ultimate support, not the place to buy, the place to exit the position. This exact same resistance that was in play on oil entire summer and start of 2018 is what we're dealing with this morning. Key Fibonacci resistance becomes key Fibonacci support. This is what oil does next. Keeps moving higher. This is what oil does next. Keeps moving higher. Shock or not. This is what oil does next. Moving higher. And what do you see? Key Fibonacci resistance becomes key Fibonacci support. Agree? No surprise. Did we know or did we know that oil will collapse to the support? Of course we did. Fibonacci said so, years in advance. This is what oil does next. Struggling immensely. Keep heading lower. 64 remains key support. What do I say? This support is out. Oil will collapse too. 55 next. This is where oil is now. Anyone surprised? Fibonacci levels identified years in advance in a play in front of you. Every day, every time. You don't need to wait for years to see the power of the method. Oil heading to 55. 55 on oil will be war zone. 55 will be absolutely crucial support, which was key resistance for almost 2 years. And if 55 is out, ouch, 45 is next. Exact same formula applies to anything you choose to trade. Buy at trend inception, not into trend reversal. Exact same event that played out in 2016 at the start of the trend is what playing out right now at the trend reversal. Rules are met. Take a trade. No matter what you trade. And this is exact same reason why Facebook sold off. And this is exact same reason why this key support remains a problem, present in front of you for years. Never forget that. This was Facebook at the start of 2018 at key reversal zone. Not a place to buy. This was Facebook struggling, reminding you, do not buy at reversal zone. Buy at key support. And this is Facebook now. Exact same level you will see on oil at 55. But only if rules are met, you can take a trade. Here's a reminder on Tesla. This was Tesla. At the start of 2018, Tesla was sitting very pretty at key Fibonacci support 255 level. What is the reversal zone? 388, shock or not. Have Tesla been respecting this key support and trend reversal level? Of course. The entire 2018 bouncing from. However, key problems remains. This is key support 255, where buyers stepped in from last week, present in front of you for years. This reversal zone 385 area will remain a war zone. This is not the place to buy. This is ultimate reminder. The reason why I named this level reversal zone. Shock or not. This is Tesla now. All the rules in the course, in Fibonacci Mastery course, you learn how to apply long-term Fibonacci levels. You learn how to use these complexities in your investment decisions, in your long-term positions. Doesn't matter if you trade oil, doesn't matter if you trade at Tesla, doesn't matter if you trade S&P. It's all the same. Choice is yours. Never enter outside of decision point 2. It will never work. If you do, you're trading with less than 20% success rate. And if you saw what's happening on S&P for weeks in the trading room, it's all the same. Shock or not. Market sold off on October 23rd. Market sold off on October 25th. Do not buy into Fibonacci resistance. Monitor for short. Market continues struggling immensely at the end of the minor trend, collapsing time and time again. And once again selling off outside of decision point 2 because this is not the place to buy. Buy at key support. Flawless place to be. Where institutions entering positions. This morning we dealt with day trading support and institutional resistance for the last 8 hours. No matter what chart you trade, and if I convert this chart to 5, exact same formula applies. Shock or not. Rules are met. Take a trade. Buy at key support, not outside of decision point 2. No matter what you trade, no matter what you invest. And if you obey that rule, the skies are the limit. Here's another reminder. Here is gold. To remember gold in 2016 at trend inception. What do I say about gold when gold at 1128? In the trading room we discuss its trend inception, and I discuss, as you understand, it's a flawless place to be. 1200 is next, with 1300 to follow. Shock or not. That's exactly what gold had done. Gold reaches decision point 2 as expected. All identified in advance. All present in front of you for months. Rules are met. Take a trade. This was gold at the start of this year. Selling off from key target from bright green level as expected. Identified years in advance. And as expected, gold collapsed completely, reminding you, never buy outside of decision point 2. Never disrespect that rule. Rules are met. Take a trade at key support and key resistance. If you start buying outside of decision point 2, you're trading with less than 20% success rate. Only if rules are met you can take a trade. As Netflix also reminded you, one of the most spectacular examples this last week. This is Netflix before earnings. As you are witnessing key Fibonacci support 315 level. Key support is broken despite stunning earnings. Why? Because this is key Fibonacci resistance, bright green line. Just like on oil, just like on gold, just like on Tesla, just like on Facebook, just like on Google. No matter what you trade. Never ever ever break that rule. Netflix adding 7 million subscribers does not mean a thing. Fibonacci means everything. What does Netflix do next? Shock or not. Selling off, crashing through key support. And that was not enough. Sell-off continued as expected until reversal zone. Boom. $140 per share collapse despite stunning earnings. Price reminding you, always take the profits of the table at bright green line. Never acquire position outside of bright green line. If you do, you're trading against yourself. Never take a trade if no rules are met. Trade only on the rules you learn in the course. And if you do, the skies are the limit. Netflix finding buyers, shock or not. Key Fibonacci support becomes key Fibonacci resistance. Where is Netflix this morning? Sitting very, very pretty in a lot of pain for the last 4 days, reminding you never disobey the most important rule you learn in the course. And if you obey that rule, the sky's the limit. In this video, you witnessed multiple examples. In this video, you witnessed ultimate reminder that Fibonacci is the only natural predictive tool in the markets. And if day trading is not your cup of tea, use everything you learn in the course for your long-term positions. But if you would like to do both, why not? Here's a couple of other reminders. Here's S&P collapsing on September 26 in the trading room from decision point 2. How many points did S&P collapse? Almost 7. No surprise. Not the place to buy, the place to exit the position. Here's another reminder. Decision point 2 on 5-minute chart on exact same day, exact same level in a play. Here's more and more and more. It's all the same. 1 minute, 3 minute, 5 minute, 15 minute collapsing exactly the same as Netflix. Doing exact same thing as oil had done for almost 8 months. This is your investment decisions. This is your day trading decisions. You want to do both? Why not? Choice is yours. Apple had done exact same thing, dancing at key Fibonacci target for months. But because key Fibonacci support was respected, Apple skyrocketed higher. Euro did not. Euro sold off from this bright green line. Shock or not, this is Euro now. Not the place to buy, the place to exit. Euro is trying and trying and trying, but this will be war zone. All identified before, never after. Never confuse the indicators with Fibonacci. Always remember, Fibonacci is natural mathematical sequence that you can use on any instrument, any platform you choose to trade, but only if you know the rules. Speculation is never an option. It will never work. Simple. If you use the rules driving the car, if you use the rules playing the football, if you use the rules playing basketball, tennis, everything, how can you speculate in trading? It will never work. The only thing that works is knowledge. And if you can apply knowledge, all you have to do is decide what you want to trade. Is it Netflix? Is it Tesla? Is it oil? Is it gold? Choice is yours. It's all the same. The only difference, risk management and trader psychology. Identify what's appropriate for you. Identify what does not cause sweaty palms. And if you do, the skies are the limit. And if you remember the most favorite bright green line, this famous 1800 number on S&P, that was present in the room since 2011. It was key support during bearish correction 2014, 2015, 2016 when S&P had shown you rules are met, take a trade. And what did the price do next? Skyrocketed until 2800, 2 years later. And what is price doing now at the end of 2018? Selling off from 1800 to reversal zone. And why in the world are buyers coming? Because Fibonacci said so on that famous historical day of October 31st, as you saw in the newsletter. Market is simple. Stop blocking your vision. Stop doing silly things. Stop chasing indicators. And if you do apply success formula to trading, the sky's the limit. Success formula exactly the same as Tom Brady used to win Super Bowl. Learn the rules, practice, make an effort, and only then go live. Every single student who is successful in the course used the exact same success formula as Tom Brady did. Tom Brady didn't speculate, didn't run all over the field chasing for someone else to push a button. He knows it wouldn't work. So should you. Use knowledge, use practice, make an effort. The sky's the limit. What you will decide to trade. Choice is yours. And as long as this support is respected, we can all exhale. But if this support is out, this is where market heading to next and next and next. One step at a time. And this is what S&P had done to the upside. Famous 2200, present in the room for years. Ultimate brick wall with 2300, 2500 to follow. Which price, of course, did next. Shock or not. Staging ultimate pain at bright green line, but skyrocketing higher as expected, as spelled out in 2016. So, learn the rules, apply the rules, and the sky's the limit. Day trading not your cup of tea. Use everything you learn for your investment decisions. You want to do both, why not? Choice is yours. So if you would like to master complexity of the markets, join us in Fibonacci Mastery course. This is what we devote our Friday's classes to. You can start anytime and start reviewing videos from prior classes. If you ever have any questions, please do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com. If you consider signing up for private mentoring, pretty please speak with me first. Thank you, traders. Look forward to hearing from you.